Hey guys, welcome back to the channel. Today we are looking at all the options trades and profit or losses that I took for the week of June 16th through June 22nd. And welcome back to the channel. I am not on face cam today. I'm dealing with a bad tooth and I'm probably been grimacing in pain every once in a while, so I didn't want to record that. But if you're new here, please like, share, subscribe, do all that good stuff down in a pinned comment down below. There's ways you can support the channel, and I'd really appreciate it. So we'll just get right into it. It's going to be a little bit long video, as these updates usually are. And I'm also going to show you a resource that I use to try to find stocks to sell cash secured puts on or do general options on. And it's just one tool in the toolbox. So we're going to start off here with the rocket position, and I've been in rocket since February 11th. I did this as a buy right in the beginning. I bought 100 shares and started selling calls, and when it dipped recently, I added another 40 shares. Currently I am not I don't have any calls on it, but I do have two puts. On June 18th I closed I let the call expire that I had on with a 22 strike, and there's just not there hasn't been an opportunity to sell another call that I liked, so I just let it sit. But I did sell another two put contracts on Rocket with an expiration date of July 30th, strike of $17, collected 53 cents on those two contracts. And yeah, we're just going to wait on that, and we'll also wait and see. Hopefully this week we'll have an opportunity to sell a call against these shares. I should have updated this price here. There we go. So right now, currently, I'm down $140 just on the stocks, but I am received premiums of $736.10, and that's all this, and the special dividend they did back in, I think it was in March. So that's the rocket position. Just two puts open on it currently. Stock cost basis after taking into consideration all the calls and put profits and everything is $15.22, and I'm happy holding the position. Next up is AHT. Now, this one might come back to bite me, but it's going to be okay, I think. I started this off on June 1st, bought 300 shares, and I sold 3 contracts. Now, I ended up on June 18th buying those contracts back at 10 cents a piece, locking in $102.94 in profit, and I sold 3 more here at 90 cents going out to July 16th. Now, I also have 7 put contracts at a $5 strike on this ticker. So, one of two things is going to happen, and I'm kind of preferring that the shares get called away with these 3 calls, and just, these go away. But, it's a possibility I get put another 700 shares of AHT, which would bring my total up to 1,000 shares in this stock. So it'd be interesting to see how this plays out. But all in all, if I do get put the shares, I've received $962.71 in premium. And my stock cost basis currently is $1.09 if I get put the shares and everything expires. So not really bad. Even if I get put 7 extra contracts there, 1,000 shares, I'd be able to probably sell some covered calls. Even at this ticker only has $2.50 increments. So even if I got put the shares, I can sell a covered call at $2.50 if I wanted to, because my stock cost basis is lower, but I would, realize less profit on that probably. But we'll just play it by ear, see how it goes. We got another month left on these contracts. so I'm not too concerned. Next up, we're going to go into interactive brokers. I'm going to use the sheet because explaining all this gets a little tiresome, probably kind of hard to follow. One thing I don't have in the tracker, though, was this credit spread that I did on Kimberly-Clark. I did it just to see how a credit spread works, and currently I don't really like it, okay? And the only reason why is because it took so long to realize a profit. Now, I did realize a profit over 50% on this trade, but it took forever to do it. Now, it's probably due to my stock selection in Kimberly-Clark. You know, if I did a credit spread on a Tesla or an Amazon or Google or something like that, that moves a little bit faster, I'd probably, be able to realize some profit faster. But I don't have that in the tracker because it was just kind of an experiment for me. So we'll just move on into the tracker. And what we'll do is look at the closed positions. And let me highlight this. The closed positions from June 16th through June 22nd. There, I closed out Twinkie. That's Hostess Cakes. I closed that out on June 16th. Exited at 50 cents. Made just a little over 50% on that one. $54.38. That was a 7-day hold. Let's see. Also on that same day, I closed out Rick, which is the Rick Hospitality. Closed that out for 5 cents. And there were 2 contracts there. Cleared $90.41 for a 20-day hold. Next day, I closed out TAN, which is a solar ETF. Closed that out. The exit price was 50 cents. And that was about a 70%, I think, profit there for a 15-day hold. I probably should add a profit percentage column here. I think I'll do that. Then June 18th, which was last Friday, I closed out 3 positions. One was Smith & Wesson. I closed out 2 contracts at 30 cents, and I realized $100.46 in profit there for a 9-day hold. Closed out Ollie. That is Ollie's Bargain Outlet. Closed that out at 35 cents. Made $39.48 for an 11-day hold, so that was good for over 50% there. And these are those AHT calls that I closed out for 10 cents. $102.85 there for 17 days. And then Monday, I closed out 2 overstock contracts. They filled differently. I had 2 and I sold them, and they sold separately, so this is the average price of the 2. Closed those out for just under 13 cents each. Profit of $173.67 for a 24-day hold. Also closed out Art K with a 52-cent exit price. That was about a 60, almost 70% profit there. $86.84 profit for a 12-day hold. And today, which is Tuesday, I closed out an IWM, which is a small cap ETF, the Russell 2000. Closed that out for 51 cents for about a 60% profit, or 60% profit. $63.72 for a 20-day hold. So those were all the closed positions. That is, what was that? 9 closed positions. And then we'll go ahead and sort this, and we'll go to the opened positions, and we'll highlight those all the way to the 16th. And you'll see I opened a Herman Miller put for a July 16th expiration. I did a 40 strike, collected 65 cents. That's a 30-day hold. I opened a XOP, which is an exploration in gas ETF. July 30th expiration, $80 strike, collected $1.25 there. Vizio, one of my favorites, has been one of my favorite stocks, really. Sold 2 puts there at a 20 strike, collected 50 cents for each contract there, so a total of $100. They actually paid me 28 cents to make that trade. And then I opened up a strangle on John Deere, ticker symbol DE. I did a 295 put and a 380 call, collected $2.20 on the put and 65 cents on the call, and did one of those each, and those are 36-day holds there. Then there's that Rocket put, those 2 puts that I put on Rocket for July 30th, $17 strike, 53 cent premium, 2 contracts there, collected 105. And there's those AHT calls, $5 strikes, 3 contracts for 90 cents, so 267.93. Opened up on Monday, I opened up an Uber put, and I did a strike price of $42.50 on Uber, collected 62 cents on that one. 61.36 premium collected, 39 days. Today I opened up 3 contracts, one on Tilray. I did a wheel on them, and I should have actually put that up there, but I didn't. Did a 14 strike on Tilray, collected 56 cents, just did 1 contract there. $55.36 premium collected. Then I did one on SoFi. I kind of got in it a little early. Could have collected about 20 cents more, but I did a 17.50 strike for a July 16th expiration, collected 60 cents there. And then I sold another IWM. Got a 203 strike, collected $1.19 for July 30th, collected 118.36. So I closed down 9 positions and I opened up, looks like 11. Is that right? Yeah, 11. So what we got cooking for the month of July. I don't have anything expiring for the rest of June, but I will, probably be taking profits here in June for July. So I got $3,159.89 of premium outstanding. For the week of June 16th through June 21st, I closed out $816.29 in realized profit, and I opened up $1,240.55 in premium. That's what those numbers mean. Now, usually I like to open double what I closed, because usually I'm taking profits at around 50%. So I was a little light putting stuff on this week. I couldn't find anything that I really, really liked. So I just, let it go. But $816.29 for the week is not a bad week at all. So that's my review for the week. Now I want to get into a tool that I use, and that is to find stocks to sell puts on, and that is on finviz.com. Now, FinViz, they have these heat maps. So when you go to FinViz, you'll probably get a bunch of ads. But you want to go click on Maps. And click on Maps. The default map is the S&P 500. Now, what you can do is go through here, and it'll show you what's in green and what's in red. So you can go and you'll be able to find sectors that are weak that day. Like, for instance, real estate was weak today. Utilities were weak today. There's just not a bunch of green in there. And like I said, there's a bunch of ads on here. You probably need an ad blocker. So, you'll see pockets of red, and you can zoom in on it. Like you'll see right here, the the cruise industries or travel were having a tough day. So Carnival Cruise right there would have been a possibility. I actually looked at opening one. It didn't fill. And I also tried Norwegian Cruise Lines, but I just couldn't get the price that I wanted on the put. So that's just the way it goes sometimes. So that's one way you can look at this, is because this is just the S&P 500. So at least, if you pick stocks from here, at least you know that they're in the S&P 500. They're mainly quality stocks. But you also have other, you have the world. I don't like this one too much, but if you're from another country or you like, investing in other countries, you can look at the world map and go through that. Or you can look at full. This is the map of all stocks listed on the U.S. stock exchanges, and there's a whole bunch more in here. And, again, you can zoom in. Like, there's a bunch of red right here. Where's this? Oh, biotech. Yeah, I don't really like playing the biotech sector, but that's one way to do it. Or there also, which I like, is exchange traded funds. So you can look at ETFs that are listed on, does it say? It's just listed on the U.S. stock exchange, I believe, and you can look at it that way. I like playing ETFs. I'm trying to get into more of them. Why I like ETFs, it removes the earnings factor from doing individual stocks. So earnings typically do not affect a ETF unless it's a super small ETF and it's heavily weighted into a couple of stocks, and those couple of stocks miss earnings or something. Typically ETFs are going to be a lot more stable. You don't have to worry about earnings, and but a lot of times the premiums just aren't as good as individual stocks because they're not as volatile. So I hope you enjoyed this tip right here. Check out finviz.com. Check out the maps. It's a good way to get an idea of what's going on in the market and get you some ideas of stocks you can research to go and look. Oh, also, you can also double click and it'll open up a chart. And it'll give you a chart. You can see the support lines and trend lines and things like that. I don't actually use FinViz because I'm used to the charts that I get off of Fidelity, and that's not necessarily a bad thing. If you like this kind of a chart, then FinViz automatically puts it all in there for you and gives you all kinds of information on the stock. So great tool to use. And that's it, guys. Hope you enjoyed. Leave me a like, share, subscribe, do all that good stuff, and hope you enjoy your week and happy trading. Have a good one. Bye-bye. I am not a financial advisor. The information contained in this video is for entertainment and informational purposes only. It is not intended to be investment advice. Please seek a licensed professional for any investment, tax, or legal advice. Thank you.